Joseph, the Greeks have announced plans to issue a 5-year sovereign bond. What are we to make of this momentous event?
Well, look, when you issue a €2 billion bond for, let's say, a coupon of 5.5%, let's assume they can get that out. I'm pricing this tomorrow, but let's assume that each interest payment can buy a hospital, a school. You know, there are opportunity costs for paying up to issue to private investors, when Greece, 80% of its debt is already owned by official creditors like the IMF in Europe.
Yeah, that's really the question.
And the rate there is 2.6%, right? Just tiny. So it looks like, well, why are they paying up?
Right. Well, surely, I mean, this sends a signal, right? We're an ongoing concern. We can issue debt, right? We're a real country.
But I think the signal is more complicated than that, because I mean, the triumphant market return narrative, sure, there's that. But also you're saying, well, look, we don't have to rely on official creditors anymore, because even though official money is more or less free money, it comes with political strings attached. So, you know, surveillance, adjustment programs, and so on. And if you're a country like Greece, you do not want to remain a ward of your European peers for, you know, decades onward, really. I mean, the current bailout ends in 2016. So it's good in the way that they're already thinking about the exit.
Well, let's take the other side of the deal. Say 5% yield doesn't sound like much for giving your money to the Greek government. Does this sort of make sense for investors?
There are compensations. I mean, one interesting thing with the terms which were announced today is that the bond will be issued under English law. Now, if you look at how Portugal and Ireland before, at the same time also came back to market, it was under local law. Greece will be exceptional, however, because it used its local law bonds to effect a massive restructuring 2 years ago. Bondholders will remember that, and they will want foreign law protection. And if they get that, then perhaps 5% makes sense. The real question is broader, does this mark the top of what's been a fairly big rally in peripheral sovereign debt?
Surely this is the Greeks signaling that they think this is the lowest yield they're going to get, right?
Yeah, sure. I mean, and more power to their elbow, really. And you have to remember, actually, the sovereign is coming at the end of returns to the market by banks, Greek banks issuing senior unsecured debt. You know, companies have, you know, long since either, you know, found ways to issue debt, despite Greece's economy being, you know, as we all know, you know, still very rough. So again, it's exceptional here. But the thing investors should keep an eye on is whether darker times are ahead for peripheral bonds.
Right. So we'll look forward to the pricing tomorrow.